Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Thursday, February 27th, 2020. This is going to be kind of short. I'm just going to go over a few things and just let you know how things have been going on. So from up here, what we were looking for was the top. We were warning members, as most of the media was saying the biggest risk is that you were, missing this move that wasn't going to end. And we had the internals that were looking lower. We had sentiment, as I showed you in the charts. We had extreme bullish sentiment readings. We had divergences on the 60-minute chart as we went up here. So we were positioning the trades on the short side, and from there we had a massive move down. And once we were in this area here, what happened was we started getting some bullish divergences. So one of the things I was saying was that there's now risk in being short, and it wasn't a buy trigger or anything to that extent. What it was just be careful jumping short out of the blue, because at some point, and I'm still believing that we are going to get this before everything is said and done, is one of these just face ripping short covering rallies, and most likely it's going to fail and we're going to probably take out the lows. But what my point that I was trying to make to subscribers was that you don't want to be taking new positions when you're here. You want to be managing the positions up here, layering out. And I didn't really see today happening as bad as it did. But we still got in a long trade, and what the trade was for, as I put in the morning notes, was that we can see 100-point reversal, and it could be where we're down 50 and then up 50. At this stage, we are down, I think, somewhere in the 100 range, and then from there rallied up. It was 94 points from the low to the high on it. The entry that I had put down was 30-30. So once we were up here, I put out another, note, and just saying anybody that took the trade, because I wasn't pounding the table on it. This wasn't even, if somebody didn't take it, I wouldn't look at them and say you're crazy, because this market's been going straight down. But I saw reasons to expect a bounce, and once we got up here, I said you need to manage your own trades. I said it would make sense if we made it up somewhere into the 31.20, 31.30 area. I said at a minimum, put a stop at entry and see what happens, or take profits. Because when you're up 70 points, what we know right now that the trend is down. So when you're counter trading, and again, this is just a trade. You take profits quick. If you're a type of trader that's looking to hang on for 2 or 3 weeks or even a week, this is not the trade you want to take, because these moves happen very, very fast. You take your 100, 150, 200 points and you step away, and you look to position yourself back on the downside. So we got the big bounce, and then the floor got pulled out on the bulls. And I know we're seeing a lot of the news media that's saying it has to do with the coronavirus, but I'm saying no, that's not it. There's something else that's going on, and one of the things that I did mention to members in a few of the morning notes was that we have this repo crisis that's going on, and that's been brushed under the rug and has been kept a good secret. But that has probably more to do with what's going on. It's not being talked about at all. The coronavirus is being blamed on it. But if you turn around and think about things, and just take a step back and say, all right, well, did we get all the way up here from these lows based off of just our economic numbers. And no, it had to do with the Fed being in the game and, just very loose money. Nothing has really changed on that end except the banks aren't trusting each other. So there's something else going on, because if this was just an economic reason where we may have a world economic slowdown, you're not going to get a 13% drop in 5 days. People are not just going to rush out. So and again, I don't have any proof on this part. My just take on it is, and this is just being, in the market for as long as I have. The coronavirus, it's just not. That's not the type of news that drops the market like this. So that's just my take on it. But in any case, we're heading down, and I don't believe this is over. We do. I am believing that we're going to get some kind of bounce at some point, whether we have to head lower first or not. But we're going to get some bounce, and I wouldn't be surprised to see us back up to 3,200 level. From where is the question, and that's really the biggest risk part. So we have this bearish wedge right now. Actually, my downside target's probably going to be somewhere in the 2,600, maybe 2,750, 2,660. This is the 200 week moving average, and you can see we do. We've come down and we've tested it. So this would be probably some type of magnet. Now, if we go through it, then we're probably coming down to the 2356. Now, the biggest risk is that we've kind of really gone straight up with a couple little hiccups here and there. Is we do a 50% retracement or even more. Yeah, I think that's a little bit down the road, but if you guys notice in some of the things that I put out, Woody's saying that, the actual low in this market probably isn't coming until 2022. Now, it seems absurd when we're heading up here, but it's just a matter of when it comes 2022, we may be down here or lower, and that's the long term view of things. But we don't, that's just more for somebody to look at. It's nothing that we trade off of. So we know that we've had some extreme bearish sentiment readings. And right now, this is support areas, so I would remain very cautious just shorting blindly. And again, that does not mean that we can't go lower. I just see support in these levels here. And once the bulls do find their footing, which, they have a lot of things up their sleeve that they could try to do it. And again, I'm not saying I'm bullish on this market at all. I'm just giving a reason on how they can do it, and it may be the Fed coming out and saying something, but you can see this market back up to these levels in a very, very, very fast manner. So that's why I'm saying be very careful, shorting down here, because we are in support. And we've just dropped almost 500 points in 5 days. That's a massive, massive move. Something we have not seen since the 2000 and the financial crisis. So here we are. And again, I would be very careful. Does it mean that we can't head lower? No. I'm just saying that at any point here, we could see that face-ripping short squeeze that gets us up somewhere into the 3,200 level. So right now, like I said, there are support levels. I do believe we're gonna get a move up here. The trade that I took, really, the reasoning was fairly simple. This was your support at 30.30. We were gapping down to these levels, so it was a Hail Mary one. Went a little bit below that, but right back up, and we made it all the way back up to 30.98. So it was 68 points. This is pretty much right where I put the second note out, saying that you got to manage your trades at a bare minimum, put your stop at entry. If we continue higher, I believe we're coming up to 30.30. That's where I would lock in profits or just take profits in here. So this is just that little trade. I think there's going to be something that's a little bit longer than that, meaning it's a day or two. And being as fast as we went down, the slingshot move on the upside could be just as fast, and that's really the main reason why I'm just throwing out caution as far as just jumping short blindly. And I'm not, if we find some footing and we head up, I don't have an issue with trying the long side. We know when the secondary top is coming. Woody has put that out, and we actually know when the actual real low is coming, and that's why I'm saying don't be surprised to see us trading somewhere down in this 2,700, 2,500 level before everything is done, and then we're going to have a rally, and then another drop, and then a rally into the election. So we have all that mapped out. Those are the dates. Those are what Woody puts out. If you're interested in taking advantage, I think we have 3 spots left on this 100-point S&P guarantee. Again, today we almost could have done 70 points just today alone. So that's why I'm pretty confident in making these these types of offers where we're going to do 100 points, and if not, you can ask for your money back. So, like I said, there's 3 spots. You can take advantage of the yearly. Again, if you ask for your money back, it's a prorated thing. So if you're in for a month, you would get your 11 months back. If you do the $3.99 for the 4 months, it's the same thing. You can stay in this and then ask for your money back if we don't do the 100 points, and that's it. But the good part about about the yearly is that you really don't have that risk part, because if it doesn't work, you could ask for your money back, and if it works and you make money like a lot of people are making right now, you're saving yourself $600 a year. But they're both open. We only have 3 spots. So with that, have a great night, and I will talk to you guys in the next free update.